Welcome back to The Explainer. So you might be wondering, how exactly do these massive billion-dollar companies get their start when they don't have millions in the bank on day one? It's honestly the number one question every beginner entrepreneur asks. It can feel like some kind of magic trick, but today we're going to break down exactly how it's done.
Well, the truth is, they start with very little. I mean, a lot of the businesses we completely admire today started right where you are right now, absolutely from scratch. They face the exact same intimidating hurdles. You've got this brilliant idea. Maybe it's a neighborhood coffee shop, an e-commerce store, or a real game changer of an app. But then, boom, you hit a wall. You need funds for equipment, employees, inventory, or, just to keep the lights on.
And that is exactly why this explainer is built entirely for you, the beginner entrepreneur. Think of this as your empowering, simple roadmap to business financing. We're going to demystify exactly how you secure the capital needed to take that brilliant idea of yours and turn it into a living, breathing reality. So here's our literal map for today. We're transforming a pretty intimidating financial landscape into 5 clear paths. We'll start with the fuel for your business, look at bootstrapping the solo route, borrowing capital with bank loans, sharing the ride with investors, exploring crowdfunding and government grants, and finally, choosing your financing roadmap.
All right, let's dive right in. Section 1, the fuel for your business.
Let's define what we're actually talking about here. Business financing is simply the process of raising money to start, operate, or expand a business. Think of it like fuel for a car. You could literally design the most beautiful, high-performance vehicle in the world, like the absolute best business idea ever conceived, but without that financial fuel, it's just going to stay parked in your driveway. Financing is the essential ingredient that makes the whole thing run.
So where do we actually get this fuel? That brings us to Section 2, bootstrapping, the solo route.
Bootstrapping, which you'll also hear called self-funding, is pretty much exactly what it sounds like. You're using your own hard-earned personal savings to get the engine running. And for a lot of beginner entrepreneurs, this is honestly the most immediate and accessible way to start. It's all you.
Now, the absolute biggest advantage here is that you retain complete ownership. You call all the shots without having to answer to any investors or lenders. It is 100% your vision. But there's a flip side, right? Your personal financial risk shoots way up because, well, it's your own wallet on the line. Plus, since your budget is capped at whatever you've personally saved up, your growth might be a little slower.
If you don't want to drain your savings, or you just need a bigger tank of gas, we shift to Section 3, bank loans, borrowing the capital.
In this scenario, a bank provides the cash. But as you can guess, they don't just hand over the keys to their capital for a cool idea. There's a toll to pay. You typically need a really strong business plan, a solid credit history, and sometimes they'll even ask for collateral. That basically means you're putting up personal or business assets to back up the loan.
Similar to bootstrapping, taking on a bank loan means you still get to keep full ownership. You remain the boss. But the major difference? The heavy responsibility of repayment. You've got to pay this loan back over time, and yes, with interest. And here's the absolute crucial thing to remember. Even if your business struggles or takes a while to take off, you are absolutely still on the hook for those payments.
So, what if you don't want guaranteed debt hanging over your head while you're trying to build? That brings us to Section 4, investors sharing the ride.
Bringing in investors fundamentally changes who is in the passenger seat with you. Instead of borrowing money, investors give you capital in exchange for a slice of your company. On one hand, you get this massive sigh of relief because there are no monthly loan repayments to worry about, freeing up your cash flow. On the other hand, you're giving up a piece of the pie. You now share ownership and you share the decision-making. If the business succeeds, they benefit right alongside you. You're definitely not driving alone anymore.
Let's move on to tap into some group efforts in Section 5, crowdfunding and government grants.
First up, let's talk about crowdfunding. This route has become incredibly popular for modern startups. Instead of relying on one bank or a single wealthy investor, it relies on hundreds or even thousands of everyday people. They all chip in small amounts of money online to help you hit your goal.
And the coolest part about this route is the distinct dual benefit. Sure, it fills your tank with capital, but maybe even more importantly, it actually validates your business idea before you even launch. I mean, think about it. If thousands of people are willing to drop $5 or $10 on your idea, that literally proves people want the product you're building. It's funding and market research all rolled into one.
Then we have government grants. A lot of governments offer these specifically to support startups and small businesses. The absolute best part? Unlike loans, grants usually do not need to be repaid. It is essentially debt-free capital. But, of course, there's a catch. Winning one is intensely difficult. The competition is incredibly high, and you have to meet very specific, strict eligibility requirements to even be considered.
We have covered a ton of ground today, which brings us to our final stop. Section 6. Choosing your financing roadmap.
The reality is there's no single perfect method here. It's all about matching your long-term vision and your personal risk tolerance with the exact right vehicle. Look, if you want complete control over every detail and you're fine moving at your own pace, bootstrapping is your route. If your goal is aggressive growth and you need significant capital right away to do it, bringing in investors makes sense. Or if you already have a stable income and a solid repayment plan mapped out, a bank loan might be exactly what you need to keep your equity while getting that cash.
Ultimately, understanding these options is all about helping you make a smarter decision and reducing your risk. But I really want to remind every aspiring entrepreneur watching this explainer of one core truth. Money is simply a tool. At the end of the day, your vision, your determination, and your execution are what truly drive success.
We've mapped out all the routes, and we've talked about how to get the fuel. But that brings us to the most important question of all. If money is just a tool, is your vision actually ready for the road? The roadmap is in your hands now. It's time to take that first step. Thanks so much for joining me on this explainer. I hope it helped clear the path for you and keep building.